What's good? It's your bro Lo, and I'm bringing you guys another saucy trading video. Hey man, it's been a minute. I've been gone. I want to start getting this YouTube back active. Uh, been through a lot of trial and error, fun challenges. Companies getting shut down, live accounts getting taken, because the companies getting shut down, and hey man, I've been grinding, and I want to come back and show you guys how my journey basically and how I'm trying to get $1 million funded. So I've been working on an Apex account. It took me about 3 months to get the live account. I didn't rush it, you know what I mean? Risk very small, you know what I mean? And I want to show you guys how I made over $1,000 trading with my live Apex account. So here you go. You can see my live P&L. Not my live P&L. Well, yeah, my live P&L. My P&L here. I started getting active through Wednesday through Friday of this week. 54% win ratio, win loss ratio, right? Largest winning trade is 406, largest losing trade 112, average winning trade 122, average losing trade 48. So you can see the risk management, you know what I'm saying, come into play here. Let's go ahead and get right into the video. I'm gonna show you guys my trade breakdowns and how I was able to make $1,000. All right, so when I start off my week, I'm looking at where can price draw to? What is my weekly bias, right? So when I'm looking at my weekly bias, the first thing I want to look at is my PD arrays, right? So if you want to pause the video before I show my PD arrays, go ahead and do that, right? As you can see, we have this BISI here, mean threshold of this order block, down close candle, and then we have sell side liquidity under that down close candle, right? And under that sell side liquidity, we have this fair value gap here, bullish fair value gap, right? So when I'm looking at price here, I'm thinking that price can open, right, high, maybe gap lower, open high, right? Maybe use mean threshold of this order block as an inversion level, or use this inversion fair value gap to trade lower into the sell side liquidity pool. So I'm thinking Monday is gonna maybe open, consolidate, Tuesday create high of the week, Tuesday, Wednesday create high of the week, and then we trade lower into this sell side liquidity pool. It wasn't much news this week, not much high impact news drivers, so nothing really much to pay attention to besides here, let's go to it. So Monday you had S&P Global Services PMI reports, right? Monday, Tuesday you had trade balances, import exports, right? Wednesday, not really much, crude oil inventories, 10-year note. Thursday, initial jobless claims, and then Friday you had this really doesn't really matter to me, but medium impact news event driver. So not really no CPI or nothing nothing crazy, you know what I mean, some light shit. All right, so let's go back, right? So when I'm looking at my weekly, I'm looking for price to trade up and target this sell side liquidity, right? So let's go into the daily chart, look at our PD arrays, right? You have this BISI right in here, that price already traded into, right? And let's skip to Wednesday. So you can see Monday already traded into that sell side liquidity pool. So when I'm looking at price, right, and I'm thinking, okay, Monday already traded into my drawn liquidity. It didn't reach the fair value gap yet, right? But it already traded into sell side liquidity and activated sell stops, right? So price isn't just gonna go down, right? Price is just gonna go down. It could, but I don't expect it to. I expect a little bit of pullback, maybe pull back into this inversion fair value gap, and then maybe trade lower, and then maybe trade into from this high to this low, right? If I was to take this high into this low, maybe trade back up into a premium to start going lower, because that's where I would rather sell at, you know what I mean, to get down into this fair value gap, right? So since we already activated sell stops, I'm thinking pullback, because you got breakout traders thinking that this is gonna continue to expand lower. I was thinking that maybe it could pull back. So let's go to Wednesday, right? Well, Tuesday. So Tuesday pulled back up. Tuesday pulled back up into that inversion fair value gap. Now, when I'm looking at dollar, I'm bearish dollar. So that means I would rather be bullish Euro USD, GU, S&P, all the indices, right? So let's go ahead and go into Euro USD and GU and see how it looks on the daily chart. Okay, so here's GU. Pause the video before I put on my PD arrays and see if you could, if you want to go ahead and do it yourself. Okay, so when I'm looking at GU, if I'm thinking that dollar can go a little bit higher, have a retracement, but I'm bearish dollar, and I'm looking at GU, and GU closed through inversion fair value gap, right? And you have clean relative equal lows here, and then I'm really not as bullish GU until we close back above this inversion fair value gap, right? And if we go look at EU ran out buy side liquidity on Monday and then traded lower on Tuesday into this volume imbalance. Now, looking at EU could continue to go higher, but if I'm looking at this range low to this range high, right, after running buy side liquidity, which we could still go higher, right, and start trading up into this daily high, I'm thinking of it trading into a discount, right? So if you look at this discount level, you can see that this inversion fair value gap here with this BISI right here is right below this low, right? So I'm thinking maybe price could trade into there before going higher, right? Okay, so my first trade was on Wednesday with GU. Now, before I'm looking to take a trade, I want to see if price trades up first into my premium array and builds up sell side liquidity, right? So you have Asia here, right? Asia range here, okay? And you have your midnight open here, midnight open price here. I would like to see if I'm bearish, right? And I think GU can go lower and DXY can pull back a bit into a premium and EU could pull back into a premium, right? I want to see if price can trade above and take out buy side liquidity first, so I could pair my sell orders to take out sell side liquidity, right? So boom, here's buy side liquidity here and that wick, and then you have a premium array right here with this volume imbalance here, right? There's no reason that I think price should trade up above this high, because this should be a balanced price range, right? Immediate rebalance here and then trade lower, and you have all this wick up all in here and that inversion fair value gap here, right? So at 7 o'clock, this is where my time starts here, and then we traded up into that buy side liquidity pool at 7 o'clock, right? So that's on the 1 hour. Here's that up candle there. We had a change in the state of delivery after we traded below that up candle here, right? So when I'm looking, okay, we took out buy side. Now where's the sell side liquidity? Sell side liquidity right here and right here, right? You also have sell side liquidity here as well too, right at Asia's low. You also have sell side liquidity here, right? But I'm not looking for it to trade all the way down here. It could just low hanger fruit, take out Asia low, and even this is low hanger fruit here. You see how you have a build up a low here, low here, low here, and it never ran out of low. This low never ran out of low. This low never ran out of low. So let's go down to the 15-minute time frame, right? Okay. So when we go down to the 15-minute time frame, as you can see, you have that up candle right here, that 1 hour up candle right there, and then if you could refine it into that 15-minute up candle here, right? On the 5-minute chart, as you can see, there's the buy side liquidity pool, that imbalance, right? Volume imbalance, right? Here's that 15-minute up candle, and then here's the 1 hour up candle open, right? As you can see, we traded down through these down candles with this inversion fair value gap here. So let me go ahead and mark that out. Boom, right? That inversion fair value gap. My first entry after price had went through this down candle, my first entry was this bearish FVG there. And then my stop was right above these highs right here. So, and then my target was these lows in here. Okay, as you can see, you have relative equal lows being built up here, relative equal lows here, and you have relative equal lows in here, and then relative equal lows in here. If you look inside of that, if you would go to like a 1 minute time frame, you can see there's an equal low right here. If you have that low there and that low there, right? So that was my target. Price went up initially here, tagged me in, and then went up into this fair value, this inversion fair value gap here. See how the bodies held that inversion fair value gap, no closes above, dropped lower. As it dropped lower, I started to move my stop right above this. Wait, where was it? Let me see. Here we go. I moved my stop right above this right here. So basically halfway. Basically, I'll take half a loss of what I'm risking. It did come up and tag me out. Actually, my stop was down in here. It did come up and tag me out because I did put it above this candle open. Tag me out, and as I saw price holding this inversion fair value gap in that up candle here, I went ahead and re-entered there. Re-entered short there and put my stop back above this same area. So initially my new position was there, and then my targets was down in here, right? After it played in that inversion fair value gap, we had that displacement lower. You have a fair value gap right here. That could have been a potential re-entry, but since I already took a small loss as it pulled back up, I didn't want to re-enter anything, right? You also have an inversion fair value gap here, right? That price traded through. Here, let me go ahead and take that off. You can see at the bottom, you can see how price respected that inversion fair value gap and fell into my first take profit, right? Which I started to take some partials and trail my stop lower, right? We took out that low here, took more partials here as I was trailing my stop, right? And as we took that out here, I trailed my stop a bit more here. So as you can see, boom. Was trailing my stop there, took that out. I didn't get more of the screenshot there, but I was trailing my stop even more, and then as it pulled back up, it took out the rest of my my runner, because I was looking for it to run lower to this low, and it just took out the rest of my runner. But yeah, that was the first trade on GU. Right. As I was in GU, I also took S&P trade. First entry was there as it ran up into that a volume, basically not a fair value gap, a liquidity void, right? Liquidity void. Let me go ahead and go to it. So this right here, as price ran up into here, I was looking for price to run lower into sell side liquidity. So I took an entry. I took an entry in here. Boom, first entry. As it broke down into that breaker, I took another entry with a fair value gap here, looking for it to run sell side liquidity in here. But as you can see, price pulled back up too deep, hit my trailing stop loss, and I just went ahead and left that as it is. But it did run into the targets that I was looking for it to run into, which was a small loss, which is okay, but I still made money on GU, right? So that was my Wednesday, GU and just ES, GU and ES. Let's go into Thursday, and my next positions that I took on GU was on Thursday. So let's go ahead and break that down. So going into the 1 hour chart, right? Let's go into Thursday. So there's Thursday here. Midnight open. Here is Asian range here. after midnight open there, right? So we have price run lower. We ran a bit of sell side, but we still have this low here, right? So I'm thinking I would rather see price open, right, come up higher and then run lower and run into that sell side liquidity pool there, right? Let's go into the 15-minute chart. Actually, let's go back to the 1 hour, look at the PD arrays. So you have that fair value gap here, and then you also have this breaker right here, this last down close candle before this move up, taking out buy side liquidity. And then we broke down here. So these are the two PD arrays that I'm looking at if I was to draw it out. Boom, there, right? Here's Asia. Let me go ahead and change that to a different color. Okay, whoa. Dude, what's going on? Oh, right here, tripping. All right, boom. So there's Asia. We ran up higher coming into London. Okay, let's go down to the 15-minute chart here. So London created the high of the day, right? And we broke lower, running into this BISI right here, created an inversion fair value gap, along with this SIBI here, creating this bearish fair value gap, right? And my first position, the first position that I took was inside of this bearish fair value gap here after we broke down. Actually, it was a little bit higher, kind of close to there, right here. Let me take this off. It was in here with my stop right above this high, right? And then my target was this low, these lows down in here, and then a little bit lower so I could at least get a 1 to 2, right? So looking at price, you have this breaker here and that fair value gap in there with my stop here. So for more context, right, we're gonna go to dollar so I could show you what happened. So boom, I entered here, and as it was going up, let's go to dollar. Go to Thursday. I was kind of conflicted with price. So going into Thursday on dollar, you can see that price on Wednesday already came up into this mean threshold of this order block and this inversion fair value gap, right? So me being bearish on GU was a bit of a conflict with my dollar analysis, right? So you can see the PD array that I was paying attention to was this volume imbalance right in here. We already took out this high, so I'm thinking that price could trade lower on dollar. So let's go to the hourly. All right, let's go to the hourly. When you look at price here, you can see that you have sell side liquidity built up here, right, with relative equal lows. And as price was running down on Thursday, I was thinking that price could run out the sell side liquidity pool first, right? First, and maybe dig up into this imbalance up into here, and then I could trade short GU, right? So as price is running lower around 1 o'clock, 2 o'clock, London, I wanted to see price take out this low, but it didn't, right? So let's go down to the 15-minute time frame. Let's go into the 15-minute. All right, so you see 4 o'clock. It didn't run out that sell side liquidity pool, but it did come into that daily volume imbalance, right? So let's go into the 5-minute. Okay, so going into the 5-minute time frame, the reason why I was conflicted on that GU trade is because there was nothing telling me that price was going higher with dollar. It could have kept going lower and come and run into this relative equal lows, right? And through this daily volume imbalance, right? As you can see. So as price failed to make a lower low here around 4 o'clock, I'm coming into price around here, right? You can see price trade up into this fair value gap with this up candle here to possibly go lower. So as I'm taking this around I'm seeing this around 4:45, which is London, basically 10:45 London time, All right, let's go into GU. All right, GU. Okay, GU 445, right? Around 445, you could see that I had entered around London, right, and was holding through London. So as price was trading, basically rejecting on dollar here, right? As price was rejecting here around London, I was kind of conflicted, thinking that price could potentially go lower. So I had changed my bias. Instead of it running down to these lows, I was thinking, okay, maybe it could start running back into these highs, into these relative equal highs, into here. As price started closing into this fair value gap, I was thinking maybe that could be inversion. And instead of me selling, I flipped my bias. I cut my trade short. Cut my trade, right? And decided to buy instead. Right? With my stop right below that inversion fair value gap and targeting those highs there. But as price reached up into this order block and had a displacement lower, right? And started creating this sell side imbalance, right? Let me go back to dollar. Right? Back to dollar. Dollar was basically closing above this inversion fair value gap here, right? So I switched my bias again. Seems a little crazy, you know. Oh, you should stick to your bias, Alo. Why are you switching your bias so much? Stick to one side. Well, it's all managed, you know. My risk is managed, so it's completely fine. Right? So when that happened, I decided to go short inside of this inversion fair value gap. Not the inversion. This fair value gap again, and decided to just stick with my sell trade. So I just went ahead and took that there, right, and targeted the relative equal lows in here. As you can see, they look pretty relative. There, right, and you have Asia low. So we have sell side liquidity being built up as prices running up into a premium array to maybe run lower, and then you have sell side liquidity here, which is relative equal lows to this, a low resistance liquidity run. So I took that there. Could have had a re-entry inside of here, but I left it alone since I took some losses inside of here, small managed losses inside of here, and basically hit my TP down into here. First partial here, and then more partials there, right? And we could go into the screenshot here. Wait, that's not the screenshot. Okay, here's the screenshot. That was all the entries inside of there, but the main position was here. And it ran lower there and took majority of my profit, and then held a little small runner. It came back and hit me out right in there, right, which is fine. So boom, that was my GU trade on Thursday. Also took an EU trade. So EU was way cleaner than GU, had a way cleaner run than GU on Thursday. I'm gonna break that down. So let's go into 7 o'clock. Well, here's Thursday right there. Thursday. Let's go and mark out Asia range. Here's Asia. There. This is Asia. Okay. So you can see that price ran up into buy side liquidity, relative equal highs in here, right? Relative equal highs in there. We also, after we ran out the relative equal highs, you have this up candle in here. This was a change in the state of delivery on the hourly chart, all through London, 5 o'clock, right? Going into 7 o'clock in here, right? That's when I started to look to get into my trades. Okay. You can see that you have this down candle here, up candle here, and then you have this fair value gap here. Now, when I'm looking to be a seller, I want to have opposing liquidity on the other side, right? Now here's the opposing liquidity. You have relative equal lows here. Look how clean that is, smooth, right? Smooth here. And as price created this relative equal low in here, you have a run up, run down, run up, run down, run up, run down, just constantly building up liquidity, right? For me to target. Trend line liquidity here, right? Trend line liquidity. You have a whole bunch of traders thinking that they're safe below this low, and all these trailing their stops all in here, right? For me to target. The premium rate that it ran into was this here, boom, right? Displacement lower. Let's go into the 15-minute chart. Going into the 15-minute chart, you have this last down close candle before the up move here, and then you also have this inversion fair value gap here, right? Which was my main focus. My entry short was here. And then my target was down here. I think my stop loss was there. Okay. Clean run. That was my target. This candle right here, this came from, let's see what news that was. Thursday, initial jobless claims. So that was the news that sent price, because when before the news dropped, the manipulation already happened. So I wasn't thinking it could have ran all the way up here before dropping lower, but I'm thinking that soon as the news dropped, it's gonna run towards its sell side liquidity pool since the manipulation already happened, right? So I kind of, you know, it could have run up there. That's the risk that you take trading, but trading with news, you know what I'm saying, I would have just took that L. But I was very confident that price was just gonna hold these highs in here and then run straight to sell side liquidity, right? So that was my EU trade. Let's go to the screenshot, right? So here's the screenshot of the EU trade here, right? Took partials in here and then left a bit of a runner to run down into that last liquidity pool in here, right? And took the rest out there. It didn't, I was trailing my stop all in here, right, for it to run down into this fair value gap, but it came up and took me out right up in here. I think I had my trailing stop somewhere up in here, and it came and took me out. Very small runner, you know. So that was the EU trade for Thursday, and we're gonna finish this off going into Friday. So for context, going into Friday, here's dollar, right? We ran up into a premium array, right? And we ran up into that inversion fair value gap on the daily, on the weekly. So weekly inversion fair value gap, right? Ran up into there, and we rejected hard after running out relative equal highs in here, there, right? So going into Friday, I'm thinking that I will rather be a buyer of EU, because if you go look at EU ran into this discount inversion fair value gap and ran into that BISI. Remember that same BISI that I was talking about in here, right, at a discount. Okay, also running out the sell side liquidity pools that was built up all in here, right? So going into Friday, let's go into my trading time. Here's 00 GM New York. Here is Asian range right here. If you guys are enjoying this breakdown, please go ahead and give me a thumbs up for the algorithm. It'll help a lot. Let me go there. Okay, so here's Asia here. You have this run lower, running up. It already ran into this buy side inefficiency. I mean this SIBI, right? Sell side imbalance, buy side inefficiency, right? So if I was to drag that out there, I'm not gonna clutter up the chart too much. right? But you can see it's there. Here's that sell side liquidity pool there, right? I'm going to take that out. And going into Friday, my trading time, you have Asia lows being built up here. So let's go ahead and mark that out here. So you have lows being built up here, right? We already traded up first into this order block right in here. And if you was to take that and maybe measure out that range, you have 50% of that, threshold of that order block in there, right? So boom, we ran up into there, right? And then we started trading lower. I didn't trade London, skip London. Let's go into 7 o'clock, right? 7 o'clock in here, right? That was when I started trading. Let's go into the 15-minute chart. Now, going into the 15-minute chart, right? We ran up first during London, creating a high, right? High here. So let's go ahead and mark out the high on London. So that's buy side liquidity there. Buy side liquidity. Top, left, boom. Buy side liquidity. And before, when we created that high in London, we started to trade lower and had a change in the state of delivery. Here, we ran up during 5 o'clock, around 5 o'clock, into this whatever premium array is up in here. Nothing very important to me, maybe a high, whatever, right? Nothing that important, but we broke down here. So let's go to the 5-minute. We broke down here, ran up, coming into 7 o'clock, right? We're just constantly breaking down, drawing towards these relative equal lows and Asia low, right? So we have clean lows here, sell stops in here, and sell stops in here, right? So I'm thinking, even though price hit on dollar, we hit a premium, right? And Euro USD hit a discount here, I'm bullish, right? But at the same time, you have relative equal lows here that price is drawn to. So in my mind, I'm thinking, okay, I can target here before I'm bullish, right? Before I think Euro can go higher and dollar can go lower, right? So the trade that I took was here. So relative equal lows here. Before, my model is basically opposing liquidity run before it runs into my drawn liquidity, right? So I'm looking for where can people get hurt at before we hit here, right? So we came down around 7:45 before New York opened, right? And we left a low in here. So I'm just looking at price, right? I'm not looking to trade inside of here or anything like that. I'm just paying attention to what price is doing at the open of New York. So we created another low here, right? So I'm like, okay, they're engineering more liquidity, right? So I went down to the 1 minute, and I'm looking at, okay, where's the opposing liquidity and where can people get hurt? Okay, opposing liquidity is, okay, we created a high here, running out highs right here, came lower, we created liquidity all in here, right? But we're gonna save that for later, right? I'm not thinking it's gonna run that. We broke down lower, created this high here, broke down lower, and we created relative equal highs here. Pay attention to this. Relative equal highs, look how smooth that is, right? So as soon as 8 o'clock came in and we ran up into that relative equal high, leaving this low here, I don't think they're gonna leave that there, right? So as we ran up higher, soon as we triggered the buy stops here, we had a displacement lower, right? That was my telltale sign that smart money is now ready to deliver to sell side liquidity down here in Asia low, down here. Actually, I already took out Asia low here, but to clear out this low too as well, right? So as soon as we ran up above here, right, we had a change in the state delivery here. A small entry could have been there, but my entry was after we took out these down close candles in here. And my entry, go to the 5 minute so I can get my exact entry. 5 minute, my entry was right in here. Okay, stops right above this high, and then my target was right below that low, for a 1 to 1.5, right? I didn't hold for a 1 to 2. I could have got a 1 to 2 in here, right? But a 1 to 1.5. You also had this sell side liquidity pool in here with a volume imbalance that I was thinking that price could have ran to, so I just held a runner down into there. Let's go to the 1 minute. Okay, so price came up, triggered me in, ran out the sell side liquidity pool, gave a pullback. I entered one more contract as it traded into this volume imbalance, and then as it ran lower again, taking out this low, I took out another partial because I had 2 contracts in here. Took a partial one out here, added another one back in. As it ran lower, took another one out, and then was holding a runner down into those lows in there. But it took out my my runner right in here. That last contract right here, because I had my stops right above that volume imbalance. So my runner got hit out here, but I still made majority of my position there. So that was the first position. After we triggered the sell stops here, in here, right? Okay, we ran above this down candle here. This down candle up in here, giving me a change in the state of delivery after sell stops was taken and Asia low was taken, right? So as we triggered those sell stops, I'm looking, okay, where can people get hurt? People that are holding their trades from London at this high here. Never took out London's high right here, relative equal highs. We have relative equal highs being built up all in here, right? So that was my target, my next target. So as price created buy side imbalances, sell side inefficiencies, right? And this place above this right here, okay? My next entry, or I switched my bias into targeting a London buy side. So if you measure out this wick, you have the 50% of it. And here, I was not expecting price to redeliver all the way back into this fair value gap. I was expecting that to be left open. So my next entry was here at the 25%, and then my stops was there, and then my target was above this high here, above buy side right here. So that was my second trade. Also, if you measure out this low to this high, you have one standard deviation right here. So that's why my TP was right there, which was a sniper TP, right? So here's the entries here. So there's the first trade there, right? And then here's the second trade on EU here. And as you can see, 50%, it did not go through there. It left this wide open. My stop was a little bit higher, actually. And then there's the target right there, right? And yeah, that's it. That was my week. That's how I made over $1,000 on my Apex account. Some light. If you guys enjoyed this video, go ahead and smash that like button, subscribe if you haven't yet, and I'll see you guys in the next one. Peace.